Welcome to tonight's special edition of Insider Access. So we're going to have a few things this evening where you're going to look at the overall markets, and that's always the most important things. Which way is the tide flowing? We're going to talk about that in terms of the markets. Are we in a bullish cycle? Are we in a secular bear market with a bullish cycle, or vice versa, etc.? Because as you know, 70% of securities will move with the markets. We're going to talk about specific securities, trade ideas, and go through a recap and a general overview. I think this will give a lot of people some additional insight. Insiders, we're going to have a little bit more to this, add to the video and or an email at the very end as we have some trade ideas coming up and some recaps on some killer trade ideas that we're in the midst of. So right away, we're looking at the SPY and we see that we've made a reversal here in the past few days. And this comes from the notion that we're going to find the bottom, and we have found the bottom in my view. This is something we talked about within Insider Access, and I didn't do it by just looking at a chart and crossing my fingers and guessing, because remember, charts can only take you so far, but if you actually understand what's happening, that'll tell you why investors are doing things. And if anybody ever needed evidence for that, it was last year as the rates started hiking. People understood macroeconomics, said, yeah, you can look at any chart you want and say whatever you want about support. Feds are raising rates, everything costs more, markets down. The same thing as when the markets were running hot during the pandemic because we're slashing rates. So I want to pull something up to show what we've been discussing so that you can understand where the markets stand today. And I'm going to refer back to an email that we had from yesterday evening. I'm actually going to pull directly from the email. Insiders, you'll know this. To those of you who are new or haven't been a part of Insider Access, this is a direct part of our emails. And I like to pull straight from our emails. That way insiders can say, hey, we didn't get that in email. Hold me accountable if it's not the case. So we've been talking about the markets finding a bottom, and that was after this past Friday, coming in through Monday with the bond markets closed. And then yesterday we reiterated a lot of those points. And I want to bring everybody up to speed on that and let you know why this is happening, why we found the bottom, and why we have opportunity to run. Plus, I'll give you projections on how long we feel this opportunity is going to be available. So let me pull that up right now. So we're going to take a look here. And first thing we're going to go through is the primary macro pressures in the market right now. What are they? Well, it's a 10-year yield, US dollar, and oil. And it doesn't matter what anybody says or chart or flow or a little secret or 10, 200 moving average or anything else. 10-year yield goes high. It becomes harder for investors to justify their positions in equities because they get a better, safe return. You can just throw your money in, as they say, a T-bill and chill, right? The US dollar has a direct impact on the markets as it rises or falls, right? Because of foreign costs, imports, exports, what the value of sales overseas are. And of course, oil. Why oil? Because of oil is a really big input cost, but oil is also a big driver of inflation. Of course, we're talking about top line inflation, not core. So those are all really big. And what have we been hearing lately? All the pundits, and a lot of these are my colleagues or people I've worked with or perhaps know, so I don't attack any specific person. That's never how this works. But what you've been hearing from the talking heads on TV and the pundits and experts and other fund managers, rates are going to 5% very soon. Oil's going to $100 a barrel, particularly after this conflict in Israel. And the US dollar will break all-time highs. No other currency is investable. I think Warren Buffett said something to that effect, but that was a little bit different. He wasn't predicting all-time highs. He said no other currency is investable. There's an argument there. If you haven't heard anything from these, that's all you've been hearing from the financial media. These three things, right? Because what the financial media does is they're behind time, so they act more like weather reporters. They're not really giving you projections. You have to fill space. You're on TV every day. There's never a point where you cannot say anything. So you're filling space and just jabbering, and then they change their positions immediately. As rates start coming down, they'll talk about why and say, well, what we're seeing now is a cooling. Where were you to say that we would cool? And so on and so forth. So within Insider Access, and insiders will tell you this, for some time, we've been projecting that in October through to November, we are going to see a cooling, the complete opposite from what all the professionals and other fund managers and experts and wealth managers would tell you. And I don't care about what someone's specific title is. Experts will say, we've been calling for the 10-year to cool, so yields to fall. And you've seen that happen. We saw it happen. We'll pull up the TNX in a moment. It's happening dramatically. We're at 4.8. We're now down into the 4.5s, and we're going to continue to cool. We speculate that oil prices will fall and the US dollar index will do the same. And we actually issued trade ideas, which I'm going to recap for you just a moment. Not only that, the reason why is because we have felt for some time, and I've projected this and I put this out on Twitter or X or whatever you want to call it. Back in May, I said the Feds would pause, and then I pulled back and said, it looks like they're going to hike one more time. And then I've been telling insiders that November will not be a hike. So you're seeing people say, oh, there's going to be more hikes, one, maybe two more this year. That's what the news was. And like I said, they always change their opinions like they change their pants. It's, oh, well, now there's a new reason why. You don't make money. You can't exploit and benefit from it if you're reporting it after it happens. It's like my saying, Tesla stock's going to go one way, and then it goes another, and I say, well, what we're seeing now is it actually broke through new highs after I said low. Yeah, we get it. You can report what's happened. I can look at a chart too. So our base case has been firm on the view that Feds would not raise rates in November despite all the noise, and that a repricing would occur as the markets came to realize this reality. So we would see the 10-year cool, oil prices fall, dollar start falling, and that would allow for the Feds to make better decisions, in my opinion. And as we approach with all the macroeconomic data, and those aren't the only data points, we knew the Feds would start to soften their tone, and that would allow us to see a repricing. What's a repricing look like? This is what a repricing looks like in the markets. The markets go from believing that we're heading to more hikes into a repricing back to higher prices when the view was that there would not be more hikes. This doesn't come from an indicator. It doesn't come from a trend line. And you can see that I have trend lines. I use all sorts of technical analysis. We actually go very deep in technical analysis. I'm trained in fundamental and technical analysis and classical. I got my license in 2005, right? So I don't play this game of this is what I'm a zealot at. Know everything and exploit every opportunity you can through your knowledge of the markets, not through trying to sell this is the magic bullet idea. So we talked about a repricing would occur. This is repricing the valuation of the markets in an environment where there will not be further rate hikes. And I believe, barring an anomalous change, and of course, war, geopolitical items can have a shock impact if they expand. If we head to World War III, obviously all bets are off, but probably don't care much about the stock markets if World War III breaks out. Find your bunker. This is a repricing. That's what a repricing of the markets look like. And what I did is, what a lot of people have missed is if you look at the aggregation of what Fed officials have been saying in October, you'll see that they've been unanimous in this view. It's ubiquitous, right? It means it's across the board. Before I get into that, the minutes came out today, and this is where amateurs get it wrong. This is where beginners and people maybe just posting Fed minutes and saying, oh, they were all unanimous that it's a higher for longer, this looks hawkish. Listen to what they've been saying. That was the Fed minutes from last month. Here's what we've seen since October, and I compiled this. Richard Clarida, and these are all Fed officials. The Fed could be done. Michael Barr, we are now at a point where we could proceed carefully. Philip Jefferson, we need to balance against the risk of policy being too restrictive. Lori Logan also acknowledged the impact of long-term yields and admitted that there may be less need to raise the fund rate. And Bostich said that I actually don't think we need to raise rates anymore. This is a dramatic departure from where the Feds were a month ago. You were hearing higher for longer. We still need one or two more hikes, higher for longer, right? And here I just talk about, look, I'm not patting on the back of Insider Access program, but the best professionals in the world have been focused on where rates would go, what the Feds would do, what's happening with oil and the US dollar, and the vast majority got it wrong. We got it dead right on all three. And so that doesn't come from guesswork. Now, what does that translate to? Well, here's a trade idea we've taken. This was in Insider Access. And of course, I have to leave some out there of the ETFs and specific price points for insiders, but I'm sharing this general trade view with everybody. Short on the US dollar and on oil. Simply put, we're short the US dollar and oil right here. For commodity traders, it's straightforward. And of course, I talked a little about ETFs. I want to pull that up. So how did oil perform? And I want to talk about oil a little bit as well. What was the oil trade like? You probably saw that I posted some screenshots and retweeted some insiders who did extremely well and had big wins on oil. Here is a little bit of a breakdown. So you're going to see it. You see the gap up here, right? This is on oil. This gap up occurred as the conflict with Israel and the Gaza Strip broke out, right? And so I saw that spike up. Our view had already been that oil is going to move down and we're going to see cooling in prices. You saw that today, this morning, so after we issued an aggressive trade idea, right? So I said right here, we are reiterating, because this idea had already been circulated. We're aggressive on oil, short right here. And then this morning, because that email went out yesterday, what do we see? We see oil drop from 86 down to 83.10. This is an easier trade, and this comes from experience. Like I said, I received my license in 2005. That's not when I started trading, right? This is easier because we're exploiting an opportunity. We're exploiting the reaction to what's happening in the Middle East, not exploiting people in the Middle East, right? I never want to take advantage. I don't, we don't take any pleasure in what's happening. But when the markets make mistakes, when amateurs make mistakes, when fund managers who are perhaps inexperienced panic and think, oh my God, World War III is about to break out, oil's going to spike, and everybody starts buying with both hands, causes a gap and a run up. When you have experience, you take advantage. And so part of the job for me is actually having a strong understanding of geopolitics. My least favorite subject, because I don't like politicians. I'm not crazy about politics, but the job demands it. And so we exploit opportunities like this. We were already on this path. This gave us such an easy, this was a softball pitch, right? Because if you're already going to look to be short oil and then you get a big spike, this was easy to say, hey, we have our entrance and we're going to see that move down and we're going to see that fill the gap. And you can see right here on this dotted line, we'd already filled the gap actually. If you look up there, run across, the gap was filled down, easy trade. That's why you see some ideas posting. My responsibility is, of course, I feel poorly when there are bad things happening around the world. You never want to hear that. The human side is always present in that regard. My duty and my role and responsibility is to exploit opportunities for myself and for my stakeholders. And so when I see those opportunities, I take advantage. This was a clear one. It was a panic buying situation, easy sell-off, and the results speak for themselves. So you see a lot of trade ideas from today. And we knew that there was going to be a quick turnaround, so it allowed us to tighten our timelines. And for those of you who don't understand, if you're trading options, the faster your expiry date, the more aggressive you're being. Well, we knew within insiders, because I explained, I said, look, it takes poise not to be the panic manager of saying it's going through the roof. In fact, if you look historically, outside of a few specific areas where oil refineries or exportation was impacted, you see panics and you see quick corrections, right? So a little bit of experience and a lot of having an existing position and just getting this gift wrapped and handed over. And for those who don't know, this is a huge move on a single day. And of course, we could apply that. There was applied to ExxonMobil. Some people applied it elsewhere. Knockout trade idea. And that was right in line with our oil projections. You see also the US dollar has been falling. You see yields have been softening. So we talked about how yields are going to fall, and that's been a driver for the markets, right? So what do we see? On the TNX, this is an anomalous line. That's because Monday bond markets were closed, right? But we held this view that we would see a cooling and we were peaking within yields. We felt that there would be an opportunity, and you get a big gap down, drives down, another big gap down today, right? Obviously, I reposted something today. Good trade opportunity, trade idea. The TNX loosely mimics the 10-year Treasury. That's a 10-year Treasury index, right? That and the drop in the 10-year yield, which has been such a driver on the markets that we were projecting, has allowed for this, right? Has allowed for this strong move up, has allowed for looking at the ETF, has allowed for this. So the idea is take guesswork out of the equation. It shouldn't just be flip a coin. Oh, I don't know what's going on, and I hope so. And you feel amazing when you win a trade, and you feel terrible, and you want to throw your monitor out the window when you lose a trade. Understand what's happening. This is straightforward. For insiders, it is clockwork. Rates are going down aggressively, markets up, at least in this cycle. That is going to change. But there are times within the economic cycle, and depending on certain percentage points and where the markets are valuated at, where you understand that the primary modulators are specific macro pressures. Right now, that's rates. Why? We're at the end, and pricing is completely being driven around where the anticipation of Fed rates are. So as we knew that the Feds were going to back off a little bit, even if their rhetoric was hawkish, this was an opportunity. And why else? Well, because their hawkish rhetoric drove markets down. And so what we waited for is to say, look, we're going to bottom, we're in a bottoming period, we're bottoming in October. And I know everybody looks back and says, it's going to be the 1 year anniversary last October. If we look here, right? Last October is when we made lows, right? You'll always get those weak points. This was last October, right? So 10, 10, 22. And people were thinking it's going to be the anniversary. Guys, there's nothing to do with it. Who cares, right? There's seasonality. September tends to be a little bit weaker. August is lighter on volume. October has seen those. But we're not driving back down to old lows just because it was last October. That's another one of those, because a trend line said so, this is going to happen. Well, because it happened last year. No, understand the different macro picture, right? And the macro picture shifted. We found a bottom, we're on the move up. Last one I'm going to show, softening in the US dollar. What is that allowed for? Well, with an insider access, that's allowed us to move into a great trade idea. And we've been really bullish on gold. And gold was out of favor and driving down. And here you're going to see a little bit of that technical analysis. See, there's a trend line there, so it's not like I hate it. But what I care about most, why do I use all sorts of things? Why do we use options flow, fundamentals, company analysis, cash flow, macroeconomic conditions? Why do I do that? Because I care less about branding my analysis and my work as a professional under some team of team technical analysis or team fundamentals. I care about exploiting opportunities for myself and my stakeholders. And why would you not want to have the most well-rounded, balanced knowledge that you can? Because it will allow you to identify more opportunities. And if there's confluence there, you see them stacked together, you know that you're in an even better place. So we've been bullish on oil as of late. And if you look at it from a technical analysis standpoint, I want to point something out as well. Here's the flaw there. People are going to look at that and say, oh, well, it's a downtrend, so it's going to reject, right? And that's where it betrays you. And I actually use these trend lines oftentimes to help educate insiders and say, hey, look, if you were looking at this on a purely technical level, right? We're going to go, this was on the hour chart. Yeah, it wasn't on the day chart. If you're looking at this purely technical, you would be thinking we're going to reject, right? Because rejection, 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 rejection. And so you'd say this is to the downside. Okay, well, what happens when it breaks above, right? It's either you have to engage in nonsense or it didn't work out, right? What is nonsense? Nonsense is if you say it rejects, oh, it rejected at the trend line. Oh, it's a breakout, right? You can't always stick to that because that's sort of one of the things you get bound into if you're dogmatic and you're sort of married to this. All that matters is the chart in front of you. Well, no, understand the macro pressures. One of the reasons we were looking for, sure, technical analysis helped us because we saw a break above the trend line. But what we were looking for is softening in the US dollar and a bit of a turning point and softening in rates because both of them would provide a tailwind to gold. And how's gold been doing for us? Well, took this as an entry point. Here's what it's been for insiders. Strong break up, gap up and go. Strong break up, gap up and go. Go, 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 right? Been in this trade for several days, sharing that. So we have a bullish view on gold. Obviously, I work with insiders and we identify protocols and opportunities for exit and projections to the upside where we see them as fit. But I wanted to share that with everybody. So quite a bit there. Those are the big items if you talk to any professional. You want to get an idea on what the markets are doing? Where are rates going? What's going on with the US dollar? What's going on with oil? Now, the caveat is for oil, there is a geopolitical issue right now in the Ukraine and Ukraine and Russia, right? And also in Israel. So Israel, Middle East, of course, oil is always front and center. And if there's a contagion, if it breaks out and spills over and other countries become involved, then we have to adjust our position, right? You don't just say this is happening no matter what. Well, no, if a meteor hits the world, things change, right? You have to be agile, right? Not married to something. But for now, we believe it's contained, the conflict, in terms of boundaries, not to say that it's all done with and everything is good and things are peachy in the Gaza Strip and in Israel, etc. But we mean in terms of the impact on the markets, we feel that the markets were able to digest and process, and the impact as it pertains to any macro pressures or choking off oil supply, right now it's contained and we're able to navigate. So in terms of the S&P 500, the SPY, we have a bullish overview. We believe that there's strength between now through November. Now, will there be consolidation points between now and then? Yes, we believe so. Of course, that's how the markets work. You might get a day up and then a day that pulls back and closes a little bit lower, and then a gap back up and a run. But our view for the moment is that we have a bullish path into November. Into November, we'll start to run into some more challenges, and of course, there are some overhanging macroeconomic issues that could take us out of what I believe is a bullish cycle, right? So we're in a secular bear market. This is a bullish cycle, right? So even within bear markets, you get bullish periods. So if you just looked at it from a longer standpoint, let's go maximum here. We're trending down and you can have movements up. So I hope that was helpful for everybody. If you're interested in insider access, it's profitstaken.com. Check that out. I'm happy to help everybody. There's a Discord, and we just introduced a new section called Active Trader where I'm posting a lot of my levels to different securities, different trades, day trades, and we're adding a lot more to it. So if that's something that's interesting to you, if you want to learn deeper, please check out profitstaken.com. If not, review this video, help your own trading. Never feel forced to do anything. Don't feel like you have to use this information to take a trade if you're new. Guys, take your time, right? It'll always be there for you. Overview of the markets, right? This is where we've been. Downtrend, bouncing up. All right, guys, we'll talk soon.